Yo, what's good everyone? Welcome back to another video inside of part 8 discussing all things related to price action. Now, today's video we're going to be talking about setting your stop loss and your take profit. Understand that, we're talking way back to one of the first videos I made. It's over the basic trading terminology, basic trading terms and terminology or something like that. We learned that the stop loss and the take profit are basically areas within the market which liquidate your position and get you out if the trade goes against you, being your stop loss, or if it goes for you, being your take profit. We know that these are automatic, in a sense, pending orders that are just activated once price hits that certain area. So what I have here are some just basic rules and guidelines, my approach to setting stop loss and take profit. Once again, I just want to reiterate the fact that I do not claim to be an expert, nor do I claim to know everything about markets. I'm sure that there are better ways out there of setting your stop loss and your take profit, but these are the ways that I do it, and then it's helped me become profitable. So let's jump right into it. So basic rules for stop loss are, if you are selling, you want to put your stops above resistance. And if you're buying your stop loss, you want to put that below support level. The reason being is you want your stop loss in a place where if it gets hit, it invalidates the trade anyways. You wouldn't even want to be in it, right? So if you're taking a sell at resistance, you put your stop loss above resistance. If your stop loss goes above resistance, you no longer want to be in that sell because it's showing that price doesn't respect that level of resistance and it's wanting to go higher. Makes sense? So your stop loss, if it gets hit, it should invalidate the trade and you wouldn't want to be in it anyways. Now, there are basic rules for the take profit. For example, really, I just target the next zone. You guys know this. You guys have, watched the videos. You know how I trade. I just trade zone to zone. If I take a sell at a resistance level, I'm targeting the next support level. It's a very simple, very easy way of doing it. And just understand that if the risk to reward is below 1 to 2, I'm not taking. I need at least a 1 to 2 risk to reward ratio. I know there are some people out there who settle for less, but it needs to be minimum 1 to 2 for me to even take the trade. I could have 5 confluences and everything looks great, but if the risk reward isn't there, I just don't take it. Okay, and what that means is 2 to 1 risk reward are I need at least $2 for every dollar I risk. So if I'm risking $500, I want to at least be making 1,000 plus. Okay, that's all that means. And then, the last rule I really have for take profit is, don't be greedy, okay? Don't give markets back profit due to you being greedy, okay? Because what's going to happen is, let's say you have a trade that, your take profit puts you out of the trade at $1,000. And then let's say that trade gets to your take profit, but you take your take profit off the table because you want to, I want to make a couple of $100 extra, right? You want to stay in the trade, you want to be greedy and not just take your profits that the market made available to you. And then let's say, that trade pulls all the way back or, takes you out of break even or, even pulls all the way back and hits your stop loss. So you had a trade that was right at your take profit and it pulls all the way back and hits your stop loss, and you let a winning trade become a losing trade, a bad losing trade. I mean, that not only hurts your trading account, but that messes with your psychology so bad. So guys, don't be greedy, all right? Take the profit when the market makes it available to you, okay? And then obviously down at the bottom, I just kind of have some more basic rules. So your stop loss should always be placed before entry and never moved unless you have a very systematic approach to trailing your stop loss. I do not do this. I don't trail my stops. I've tried it before. I'm no good at it, I guess. But there are ways of, trailing your stop loss. For example, I know people that, when the trade goes for you and it gets a 1 to 1 risk reward, you move your stop loss to break even. When it becomes a 2 to 1 risk to reward, you move your stop to 1 to 1. So that way, if it pulls back against you, you at least make profit or break even, and so on and so forth. Like I said, I just don't do that. Or, you can just be the plug your stop loss in and just let it ride, set and forget. That's what I am. I'm just, as soon as my stop loss is in, bro, whatever happens, happens. Okay? And you can also, there's also systematic ways of taking profits. For example, like there are people who, let's say, price goes to a 3 to 1 risk reward. I'm pulling, let's say like 80% of the thing off the table and then trailing stops is the way it goes. I also am not one of those guys. I plug in my take profit and just let it ride. Whatever happens, happens. That's my kind of approach to setting stops and take profits. Continuing on those basic rules, right? You need to understand that your take profit should be realistic, right? If your pair typically moves roughly 50 pips per move, you shouldn't be targeting 400 pips. Like that's just ignorant and just like, come on now, right? That is greed right there. If you know that your pair, if you get like a good move, a good push, and your pair moves, 50 to 80 pips, why the hell are you targeting 250, 300 pips? Why, right? If you're a day trader or an intraday trader, right, or like a scalper intraday, why would you be targeting moves that are 300, 400 pips? Like that directly goes against your psychology. You know you can't be in trades that long, but you know it's going to be multiple days for something to move 300, 400 pips. So that's just be smart. You need to be realistic when it comes to setting your take profits. And then the last thing I have here is something I kind of put into my own psychology whenever I was coming up is you'll never go broke taking a profit, but you will go broke by not cutting your losses. That's why it's so important whenever you enter your stop loss, you don't move that thing. And it doesn't matter what your emotions are telling you to do, that stop loss stays right there, okay? Now, like I said, guys, I don't claim to be an expert. I don't claim to know everything. I'm sure there are better ways out there of taking profits and trailing your stop losses or setting stop losses and all that. I'm just sharing what I know and what has helped me become profitable. I'm not saying that there isn't a better way out there for you, and that's kind of on you to do your own research and really your own back testing and determine what way is best for you and your psychology. You need to do your own research and find out what method works best for you. Now, moving on, guys, we're going to hop onto the charts, and I'm going to show you, real examples. I'm going to show you a break and retest example. I'm going to show you a rejection off a supply and demand level, and then I'm going to also show you, my kind of own breakout strategy, which you've kind of already seen. But yeah, so I'm going to pause this video, and I'll see you guys on the charts. All right, so now that we're on the charts, we're going to be looking at a couple of, setups that I've taken, over the past few months. Some really good setups. So the first example that I have here is based off of just market structure. This doesn't tie into the fact that, I guess it kind of does, because you can see the rejection on the daily, on this daily level of support and resistance represented by the white line. But really I took this just based off of, a structure flip and then a break and retest of said structure. So I'm just going to highlight, what I did, how I identified where I'm going to put my stops at, and then how I place my take profits. I have 3 different examples, 3 different ways of, placing stop losses. So the first one, we had bullish structure coming from here to here, and then obviously, structure flipped. We had a break through the last significant lower or higher low, because this is the highest high. This is where it came from. That's the last significant higher low. Bullish as long as we stay above it. Obviously, as you can see, we broke through. So then I was waiting for a pullback. This happened too late in my session. I really got in during this session. So this is my pullback to my level of market structure. So when I'm taking trades on market structure, my stop loss, it is very important that I put it above the now last significant. So if structure is now bearish, it's important that I put my stop loss above the last significant lower high. If I'm taking buys, it's important that I put it below the last significant higher low. So in this example, as you can see, we had the break below, the pullback up into it, and it came from here. So my stop loss just has to be above here. Because why? Because we want to put our stop loss in an area that if it gets hit, it invalidates the trade. I don't want to be in this trade if price comes up and hits above this level. Why? Because that would mean that this structure that I'm taking the trade off of, this bear structure that I'm taking this trade off of, that means that structure would flip bullish if price got above here. That's why my stop loss is up here. Okay, now, yeah, it was like right here. May have been a little tighter, but something like that. Okay, so now it's important that I'm not putting my stop loss above this zone, right? This market structure support and resistance zone, because it's not a major structure, or it's not a major support and resistance zone. This is just a structure zone that I found on the hourly time frame. So it's important that I put my stop loss above the last significant lower high inside of this market structure. Does that make sense? And then when it comes to finding take profits, I literally just put my take profit at the next level of basically market structure. And now, so keep in mind, when we had the bullish pattern, we had this leg that created this, and then when price flipped, we retested. Now, based off of just this structure alone that I have drawn here, where is the next lowest structure level? Obviously, you could say like right here at the low, but we're anticipating to break through that, to continue lower. Where do we see it going to? Where the last, where this leg started. So that's all I did. I just targeted the next significant level. Now, obviously, you guys are saying, oh, maybe, or why didn't you, target the next daily level? Well, because my daily level is all the way down here. And remember, I'm an intraday trader. Okay, and remember how I told you want to be setting realistic, take profits and whatnot. You know, like a 380 pip take profit is not realistic for me because there's no way that my psychology will let me stay in this trade that long, which is why I just targeted the next level. I could stay in it a couple hours, like I said, but I'm not going to stay in it like several hours, up to a whole day and a half, right? I just can't do that. Okay, so that's one way of setting stop loss. If I'm taking a stop, or if I'm taking a trade just based off of market structure and market structure alone, obviously there's more confluences here, but if it's just based on market structure, not daily levels of support and resistance, if it's just structure, then my stop loss needs to be in a place that where if it gets hit, it validates that structure. So if I'm taking sells at market structure, resistance levels off of market structure, if I'm taking sells from there, my stop loss needs to be above the last significant lower high. If I'm taking buys off of market structure, my stop loss needs to be below the last significant higher low. Does that make sense? Cool. So now I'm going to go to the next setup. All right, so the next setup was actually taken at a major level of daily support and resistance, as you can see represented by the white line. Factored in, I had other confluences to get into this trade, but the main one being, hey, we're at a major daily level of support and resistance. Enter to sell. I'm not going to go through all the confluences right now, but I just want to highlight how I set my stop losses and take profits based off of different trades. So the last one I showed you guys how to set up a stop loss based off of market structure. Now I'm going to show you how to set up how to set your stop loss based off of support and resistance. So if I'm in support and resistance, if I'm taking support and resistance trades, my stop loss is just going above support and resistance. Very simple. So obviously this little section right here, it wasn't during session. Now this one was when we got this retest. So I entered off this retest. My stop loss simply went above this level. Okay. It's just simply above support and resistance and above, the next closest wick. That's kind of how I do it. And just kind of, give it a little bit of room to breathe. Like I'm pretty sure it was like a 25 pip stop. So probably like right in there. And then obviously just targeting the next level. If I'm ever uncertain on where I want to target, I simply you go up one time frame. So remember, I have the daily, the 4 hour, the hourly, and then the 15. If I'm having a tough time finding the next level on the 15, I just go to the hourly. Okay, if I'm trading off the hourly and having a tough time seeing, just go to the 4 hour. Okay, and that's how I determine my targets. Now, as you can see, obviously on the hourly, I'm just targeting this previous low over here. It's a very simple way of trading. And that's basically, that's how I set my stop loss and take profit on that trade. Where are we at? Okay, so that's how I set my stop loss based off of support and resistance. So now you know how I set my stop loss based off of market structure, and now you know how I set it based off of support and resistance. I have two different ways of kind of setting my stops, and then the next example, I'm going to show you how I do it based off of my breakout strategy. All right, so now onto my breakout strategy. You guys kind of already seen this setup, in the past couple videos. Now I just kind of want to go over, how I, set my stop loss based off of. So when I'm trading GJ, I have a breakout strategy, something that has been built on, like I've said in the past videos, hundreds, if not thousands of trades. I know that I want to set my stop loss at 10 pips every single time. Every single trade, I'm setting my stop loss at 10 pips. The reason being is, just due to my back testing and, my own research, I've learned that, if GJ goes to break out of my certain range based on, all kinds of other stuff, but just for setting my stop loss, if price breaks out of that range and pulls back into that range and goes against me, if it runs if it runs at least 10 pips against me, then it's probably just going to pull back into the range and go, opposite of where I wanted to break out to. It's going to be a consolidation day. I've already said this in the past videos, but just know that my stop loss being 10 pips, It's not just like, oh, I just want to be at 10 pips, right? No, it's like legit based on like a bunch of back testing and just tons of hours and tons of trades. So that's why my stop loss on my breakout strategy is just 10 pips. Now my targets depend. Typically, as you can see here, I just have a template created. My basic, I'm just targeting 30 pips. I just want to get a 3-to-1 risk reward, and it's very, very profitable for me to have a 10 pip stop and a 30 pip target. But also with that being said, it just depends on where the move is happening, based on kind of. Let me show you. So like I was saying, sorry about that. I had to pause the video, but so as I was saying, I typically target 30 pip take profit on my breakout strategy on when I'm trading GJ. But it also, I have the ability to, move my take profit and target bigger, have bigger take profits if we're nearing, close to a major level of daily support and resistance. So like in this example, we knew that, this kind of area right here, based on the previous videos, if we look at the hourly, knowing we have the daily's bearish, the 4 hours bearish, the hourly's bearish, all signs are pointing to, just flying down. Sorry, this is a different chart than what I normally trade on. But anyway, so then we know we have a structure. We know we have market structure being broken, retest. We know we have a market pattern, which is break and retest. We have a candlestick confirmation, a candlestick pattern showing that we have a bearish engulfing. All these things are lining up, telling me that, hey, price really wants to go down. And where are we looking to go down to? The next major level of daily support and resistance. And then just knowing that I'm getting in, kind of towards the tail end of this move, I can target more than 30 pips. I can target the next daily level of support and resistance on my breakout strategy. Now, if this same thing occurred at the top up here, I would just be targeting 30 pips because my breakout strategy, I want to be in and out within an hour and a half. And I know in an hour and a half, GJ, bearing like, some crazy news announcement or something, GJ does not move 230 pips in an hour and a half. It just doesn't happen. So if this same setup happened up here at this daily level of support and resistance, I would have just simply right click, template, sell, okay? And it would be targeting 30 pips, same stop loss, but I would only be targeting 30 pips. But because this happened towards the bottom of, this extension, and I'm trying to catch, the last, full ride of this extension, I could easily target the next daily support and resistance level, which is 74 pips away, because I know that GJ can easily move 74 pips within an hour and a half, which, as you can see here, it did. I mean, hell, it moved like, I don't know, like 60, 70 pips maybe. Yeah, 60 pips, 55 pips in 15 minutes. I mean, like I said, you just got to be realistic when you're setting your take profits. You wouldn't want to be targeting 400 pips if you don't plan on being in that move, more than like 2 hours, right? You just can't do it. Now, if you're trading something that moves a lot more, with like more volatile, like if you're trading like US 30 or indices or like gold, now gold could move like crazy, indices move like crazy. So you just got to know what pair you're trading. If you're trading, like something that, like I said in previously in this video, if you're trading something that only moves roughly like 50 pips per move, you shouldn't be targeting like 300 pips. That's just ignorance, right? And that's greedy. Okay. So I mean, that's really it. Those are my 3 ideal setups. I have a break and retest of market structure. My stop loss goes above either the last significant high or low, or my fault. My stop loss goes below the last significant high or low, or above the last significant low or high. If I'm trading off market structure, if I'm trading off daily levels of support and resistance, my stops just go above or below support and resistance. And then obviously my breakout strategy has a 10 pip stop loss every single time, and then targets depending either 30 pips or the next level of daily support and resistance if it's realistic. And then obviously my targets on the first 2 examples are just the next zone. Okay, and I'm just trading zone to zone. Very simplistic way of approaching this. And I really hope that this kind of helps you understand why I do, or why I place my stop losses in certain places and how I chase my targets. With that being said, guys, I really hope this video helps, and I'll see you on the next one. Peace.